Imagine a blockchain that can handle tens of thousands of transactions a second, charge a fraction of a penny, and settle almost instantly. That promise turned Solana into one of the most talked about and most debated projects in crypto. To some, it's the network that could finally make blockchains fast enough for the real world. To others, it's a project that's had to overcome real growing pains, including network outages, to earn trust. So today, no hype and no price predictions, just a clear breakdown of what Solana is, how it works, what it's used for in 2026, and the honest risks. Let's get into it. So what is Solana? It's a blockchain, a shared digital record book that thousands of computers keep copies of, so no single company controls it. But Solana was built with one obsession: speed. The problem it solves is congestion. Older blockchains like Ethereum get slow and expensive when busy, like a single-lane road at rush hour where the toll to skip the line gets ridiculous. Solana was built to be a multi-lane superhighway instead. Compared to the big names, Bitcoin is digital gold, mainly for storing value securely but slowly. Ethereum is a world computer that runs apps, but historically traded speed for flexibility. Solana wanted both the app running power of Ethereum and the speed and low cost to use it at scale. One key design choice: Ethereum relies on helper networks built on top of it for speed, while Solana does everything on one fast base layer. Remember that, because it's both its biggest strength and its biggest criticism. Now the backstory. Solana was created by Anatoly Yakovenko, a former Qualcomm engineer who, in 2017, designed a way to make a blockchain far faster. With co-founders including Raj Gokul, the network launched in 2020. It exploded in 2021 as a hub for NFTs and DeFi. Then, in late 2022, it hit a major setback. It was closely tied to the FTX exchange, and when FTX collapsed, confidence and the price crashed. From 2023 to 2025, it staged a strong comeback, reaching a new high in early 2025. And in 2026, it entered a new phase with regulated investment products, big partnerships, and its largest ever upgrade in testing. So how does it actually work? 3 simple ideas. First, proof of history, Solana's signature invention. Think of it as a notary stamp. Most blockchains waste time arguing about what order transactions happened in. Solana built a cryptographic clock that timestamps each transaction before the network agrees on it, so everyone already has a trusted, pre-ordered list. Second, proof of stake. Validators lock up or stake their Solana as a security deposit to confirm transactions and earn rewards, and they lose it if they cheat, so honesty pays. Together, these let Solana process thousands of transactions a second, each costing a tiny fraction of a cent, fast enough to feel like tapping a card. And it keeps pushing. An upgrade called Fire Dancer aims to make it faster and more reliable. And its biggest ever change, Alpenglow, is in testing to cut the time a transaction takes to finalize from about 13 seconds to a fraction of 1. To be clear, Alpenglow isn't fully live yet, and big upgrades carry real risk, but the direction is relentlessly towards speed. A blockchain is only as valuable as what's built on it, so here's the 2026 ecosystem. In DeFi, the apps that let you lend, borrow, and trade without a bank, Solana holds several $billion in value with names like Jupiter and Camino. It's a top home for NFTs and digital collectibles, thanks to tiny fees. It hosts a huge supply of stablecoins, crypto's digital dollars, and major payment companies now use it to move money cheaply. It speed suits gaming and consumer apps, and it even launched its own crypto phone. One of its fastest growing areas is real-world asset tokenization, turning things like treasury bonds and stocks into instant digital tokens. And in 2026, Solana actually passed Ethereum in the number of wallets holding these assets. It's also a hotspot for crypto meets AI projects. In short, this is not a one-trick chain. Now the Solana token, and don't worry, tokenomics just means how the token works. Solana has 3 jobs. It's the fuel that pays for every transaction, the security deposit for staking, and the reward for validators. On supply, here's a key difference from Bitcoin. Bitcoin is capped at 21 million, but Solana has no fixed maximum. It uses a planned inflation model, creating a small amount of new Solana each year to reward stakers, with that rate set to decrease over time, while a portion of every fee is burned to offset it. Why care? Inflation can dilute value if demand doesn't keep up, but it also funds the security of the network, a trade-off, not automatically good or bad. Stakers earn rewards in the mid-single-digit percentages, and well over half of all Solana is staked, which secures the network and reduces the freely circulating supply. So what does Solana do well? Speed is its real headline. Few major chains match it. Low fees unlock things like micropayments and gaming that aren't practical elsewhere. It has strong developer adoption, is often ranked as a top choice for new projects, and broad ecosystem growth with millions of daily users, not just speculators. And the biggest 2026 shift is institutional interest. Regulated funds tracking Solana have pulled in over $1 billion, major banks and payment firms have signed on, and US regulators classified Solana as a digital commodity, its clearest legal footing yet. But a smart investor reads the other side too. Network outages are Solana's most famous weakness. In its earlier years, it stopped processing transactions entirely on several occasions, a serious flaw for a money system. Fairly, reliability has improved a lot recently, but the history is real, which is exactly why upgrades like FireDancer and Alpenglow matter. There are centralization concerns too, that one fast layer design needs powerful, expensive computers. So critics argue fewer people can run it, making it less decentralized than something like Bitcoin. And there's fierce competition from Ethereum and its helper networks, from Avalanche, from newer fast chains like Sui and Aptos, and from payment-focused networks like the XRP Ledger. There's no guarantee Solana stays ahead. None of this makes it bad. It makes it a real technology with real trade-offs. So where does Solana stand in 2026? It's one of the most used blockchains in the world by everyday activity, leading in areas like app revenue and real-world assets. Partnerships have been the defining theme, with money transfer firms, card issuers, banks, and fintechs adopting them for payments and settlement. Developer activity stays strong. On market position, Solana is among the larger cryptocurrencies by value, though I'll note neutrally, it trades well below its early 2025 high, and I won't predict where it goes next. Be skeptical of anyone who claims they can. The vision its supporters describe is becoming the high-speed backbone for on-chain finance, where payments, trading, and assets move at internet speed. Whether it gets there depends on execution, reliability, and competition. So, who is Solana for? This is about fit, not a buy recommendation. For investors, it tends to suit those comfortable with higher growth, higher risk crypto who believe in the fast blockchain thesis, while cautious investors may find its volatility tough. For developers, it's appealing when you need low cost and high speed. For businesses, especially in payments and finance, it's fast, cheap infrastructure for moving money and tokenizing assets. And for everyday users, it's simply cheap and fast to actually use. The common thread, people who value speed and low cost and accept the trade-offs. Let's bring it together. Solana is a high-speed blockchain that does what older networks struggled to do, handling huge volumes fast and cost-effectively on one base layer, powered by the Solana token and secured by staking. In 2026, it's a serious ecosystem across DeFi, NFTs, stablecoins, gaming, and real-world assets, with genuine institutional backing. But it carries real trade-offs, a history of outages, debates over decentralization, heavy competition, and normal crypto volatility. The balanced bottom line, Solana is one of the most capable, widely used blockchains out there, and it's still proving it can deliver reliably at scale. Both are true at once. Understanding the tech isn't the same as deciding it's right for you, so do your own research. Never invest more than you can afford to lose, and know that nothing here is financial advice. If this finally made Solana click, do me a quick favor, tap like right now. It genuinely helps more curious people find these breakdowns. Then subscribe and turn on the bell, because every week I break down another coin exactly like this. Clear, honest, and never hyped. And drop a comment telling me which coin to explain next. I read everyone, and the most requested coins become the next videos. If it helped you, share it with someone just getting into crypto. Thanks for watching, and I'll see you in the next one.